Markets are holding their breath. Inflation is not dead. AI hype is back. And everyone is asking the same question. Are we on the edge of another tech-fueled bull run, or is this the calm before a much deeper correction? This week, global investors are split between fear and euphoria. Big tech earnings, interest rate rumors, and a surging wave of AI narratives are shaping what could be a pivotal moment for both traditional and crypto markets. Let us break down what is really happening beneath the surface. Because in times like these, smart positioning can make or break your portfolio. Let us start with the big picture. Across the United States, markets are absorbing mixed signals. On one hand, recession fears have cooled slightly. Corporate earnings, particularly from big tech, are coming in stronger than expected. That has pushed major indices like the S&P 500 and NASDAQ back toward recent highs. But the optimism is fragile. The Federal Reserve continues to walk a tightrope. While inflation has cooled on goods, services inflation remains sticky, especially in areas like housing, insurance, and transportation. Traders now expect fewer rate cuts than they did just a month ago. Futures markets are pricing in a later and smaller rate cut cycle than originally hoped. That is putting pressure on rate-sensitive assets and consumer sentiment. Meanwhile, in Europe, the picture is more uncertain. Germany's industrial production remains weak, and confidence across manufacturing sectors is deteriorating. Japan's central bank is still holding ultra-low rates, but the yen is weakening rapidly, creating ripple effects in currency markets. Add to that the ongoing trade rhetoric between China and the United States, including fresh tariff talk, and we have got the perfect storm of uncertainty brewing in the global economy. Now here is where it gets interesting. Oil prices have pulled back slightly after spiking earlier this year. Meanwhile, gold is trading just below all-time highs. This matters because historically, when gold rises and oil stalls, it signals a risk-off environment. Investors are looking for safety. At the same time, we are seeing growing institutional demand for Bitcoin as a macro hedge. Bitcoin's correlation with gold is strengthening, and it is increasingly being viewed as a store of value by non-traditional players. But here is the nuance. Bitcoin thrives not just in fear, but in volatility. The more uncertain the macro outlook, the more attention crypto tends to attract. That is why this moment, with a mix of sticky inflation and fragile optimism, is potentially very bullish for digital assets. Meanwhile, countries with weakening currencies like Japan and parts of Europe are seeing increased retail and institutional interest in stablecoins and Bitcoin as a hedge against local devaluation. Let us zoom into the crypto space. Bitcoin is holding its ground above $63,000, showing resilience even as equities waver. The halving is behind us, and the market is now watching for post-halving supply shocks to kick in. Institutional flows through ETFs are steady, but not euphoric yet. That is a good sign. It means this rally is not purely speculative. Ethereum is struggling a bit more. While developer activity remains strong and staking is climbing, the lack of immediate catalysts is keeping ETH range-bound between $3,000 and $3,300. However, long-term positioning looks favorable, especially if Ethereum ETFs gain SEC approval later this year. Solana continues to be the standout among altcoins. Despite short-term pullbacks, network activity is surging, thanks to meme coins, real-world adoption, and increasing venture capital exposure. Another coin to watch is ASI, the Artificial Superintelligence Alliance token. Following the merger between Singularity Net, Fetch AI, and Ocean Protocol, ASI is now becoming a key narrative coin in the AI and crypto space. While still highly speculative, its presence is symbolic of a broader shift toward narrative-driven investing. Investor psychology right now is divided. Whales are consolidating, new wallets are rising, but retail FOMO is still on the sidelines. That means there is fuel left in the tank, if macro winds do not turn against us. Here's the big picture insight you will not hear on mainstream channels. This market is not driven purely by fundamentals or fear. It is driven by selective conviction. Investors are no longer blindly bullish or bearish. They are making high conviction bets in areas where narrative, utility, and macro alignment converge. Think of crypto in 2025 like tech stocks in 2013. Early institutional adoption, rapid innovation, and high volatility, but with massive upside for those who can filter noise from signal. If you are allocating capital now, focus on 3 core pillars. Narrative strength. Is the story compelling and aligned with macro trends? Network activity. Are people using the chain, not just holding the token? Liquidity depth. Will big players be able to enter without causing chaos? Using that framework, assets like Bitcoin, Ethereum, Solana, and even emerging tokens like ASI are worth watching closely. So what comes next? Markets are dancing between optimism and caution, but those who understand the macro currents and connect them to crypto movements are positioned to lead the next wave. If you found this breakdown helpful, hit the like button to let the algorithm know. Subscribe to Crypto Wayfarer for weekly deep dives that go beyond hype and get straight to the signal. And drop a comment below. What is your top altcoin pick for this quarter, and why? Until next time, stay sharp, stay curious, and stay wayfaring.